Good morning. Happy Thursday. Good to see everybody. Mr. Chad Wicks giving me shit. And I got the biggest Under Armour logo today ever. He said the official Under Armour support channel, rather. And yes, apparently I do only wear Under Armour. I apologize, but it's just comfortable. Sorry. Anyways, guys, welcome back to the Daily Grind. Good to see you all. Thanks for showing up. Let's see who is in the chat. We have Son of a Rabid Panda. What's up, buddy? Again, Chad Wicks, Jim C, good to see you. Steven Cicero, Taines, Alvidus, good to see you. Let's see who else is here. All Set Miner, Patrick Murphy, Dumpster Fire, Chris Hanley, good to see you, buddy. Good to see you. Anybody else that I may have missed, I apologize, but let's get into this. I want to go over the Fed meeting, right? Altcoin Daily actually made a fantastic video, kind of clipping a whole bunch of stuff together. We also have CNBC did, so Crypto World, we usually go over the daily news, and then they actually did like a recap of just Bitcoin as a whole, and it's kind of neat. So it's like a 10-minute video, totally worth watching. So I want to kind of just dive into it. We can talk about it as we go along. All right, let's get into this. Let's see what the market's looking like today. As you can see, it's red behind us, but is what it is. It's really not too bad. It's still kind of floating around the same area. Bitcoin 26,700 more or less. We have Ethereum under 1,600. That kind of sucks, but is what it is. Dogecoin 6 cents. We have LTC 63 bucks. BNB 211. XRP is 50 cents. Check out crypto bubbles over here. As you can see, this is on the week. Rollbit's down 19.8% on the week. Man, I'm still shocked about Toncoin. It's crazy. I wonder why that's really pumping like that. That's pretty nuts. All right, look at this on the day. Holy shit. Immutable X, or immutable. This is IMX. What is going on here? This is up 22.9%. Anybody into this coin? Anybody at all? Let me know in the chat. Let's see. Dan R. Don't forget Under Armour code and like. Well, no, Under Armour doesn't support channels like this. I don't think. I mean, they might, but I'm not that kind of person anyways. I don't care about making money off people. What's up, Power Minds, dude? I haven't seen you in forever. Good to see you, buddy. All right, let's check out the Fear and Greed Index. I don't want to blind you guys. Let's see what we're at. 47. Neutral territory, pretty much where it's been for quite some time, to be honest. Hasn't really changed much. All right, top 10 coins by coin market cap. Then we'll get into this. We have Bitcoin, Ethereum, Tether, BNB, XRP, USD Coin, Lido Staked, Ether, Dogecoin, Cardano, and Solana. We have Litecoin in 15th and Shiba in 17th, if anybody cares. All right, let's do it. Let's start with this one right here. This is Crypto World, CNBC Television. They're going to talk about a bunch of stuff. So more or less, they do like the daily news stuff, and then we'll get into Altcoin Daily's Fed meeting video, which is super good. Let's do it. You guys have any questions? Add me in the chat.
Today, a former Deutsche Bank employee pleads guilty to crypto fraud. Grayscale files for a new Ether futures ETF. And Brian Mossoff, the CEO of Ether Capital, breaks down the factors that could lead to Ether's next prolonged rally.
Oh, and a quick little plug for my channel. I actually do have a Ethereum like explained video coming out this morning. I'm going to drop it after we're live here today. So if you guys can watch that, let me know what you think about it. Just a quick little video, kind of Vitalik explaining what Ethereum is, because I've come to notice that a lot of people don't really understand the underlying, like, what is this crypto that I'm investing in. So I think it's important to have those little, videos on the channel. You guys let me know what you think about it, obviously, in the comments below or in the live chat. If you guys have already seen the Bitcoin one, just let me know. But yeah, let's continue. And hit that like. Appreciate it.
Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies dropping slightly today, but as of noon Eastern, Bitcoin still traded above the $27,000 level. Ether dipped more than 1.5%, trading below $16.50. Solana, however, rose to $20.19. Okay, let's talk about the top stories. A former Deutsche Bank investment banker pleaded guilty yesterday to a crypto investment fraud scheme. According to federal prosecutors, Rashawn Russell misappropriated funds between November 2020 and August 2022 from investors that he enticed with promises of big returns from crypto trading. Russell then used the funds for his own personal benefit to gamble and to repay earlier investors.
What a scumbag.
The Attorney's Office for the Eastern District of New York said that more than 29 investors lost at least $1.5 million through his, quote, scheme. As part of Russell's plea agreement, he'll have to repay those funds. Next, Stanford University will return all of the gifts that it received from the now bankrupt crypto exchange FTX. That's according to Bloomberg, which cited an emailed statement from a university spokesperson who noted that Stanford has been in discussions with attorneys for the FTX debtors to recover the gifts and will be returning the funds in their entirety.
Wait. Hold on. Is this part of the gift that his parents got? That was like $10 million. You just like pull $10 million out of your ass, like, oh, I'm gonna give this back to you. Like, what?
Follows a lawsuit against the parents of Sam Bankman-Fried, filed this week, which alleges that the university received millions of dollars in FTX group donations. SBF's parents, Joseph Bankman and Barbara Fried, are both Stanford law professors and, according to this court document filed on Monday, allegedly funneled millions of dollars from the company to, quote, enrich themselves.
So they must have. So this is the school, I assume, got their own donation, which was like $5.5 million. That's crazy. On top of the parents getting $10 million. No wonder where everybody's money went. God damn.
Reached out to Stanford University, but didn't hear back right away. Last up, Grayscale has filed to launch a new Ether futures ETF after it abandoned plans for a similar fund back in May at the height of the SEC crackdown on crypto. The move follows a wave of other applications from asset managers for ETFs that track Ether futures, according to the Wall Street Journal, which added that an Ether futures ETF has yet to be approved. Now, last month, Grayscale won its lawsuit against the SEC in regards to its spot Bitcoin ETF application. Now, Grayscale also offers an Ethereum trust investment vehicle. All right, sticking with Ether for our main story, a new upgrade for Ethereum's network hopes to slow down the pace of staking and avoid a surge in gas fees. Crypto World's Jordan Smith asked Brian Massoff of Ether Capital to explain how that upgrade will work. They also spoke about the factors that could drive Ether's next long-term rally.
Can we just talk about the gas fees and how disgusting they are in Ethereum sometimes? It's so awful. I hope that gets fixed. I do.
So there's this new Ethereum improvement proposal. It's EIP 7514. It looks to slow the maximum growth rate, or the growth rate of maximum validators on the network. Can you walk me through why this change is being proposed? What problem is out there that it's looking to solve?
So proof of stake is still relatively new to Ethereum. Even though it's been a couple years since POS first went live, it's still been relatively new that we're seeing a lot of people want to participate in this activity. And what we've noticed over the last year is that there's a large number of validators coming online. They enter the queue, and that entry queue, that buffer, that waiting period before the validators come online has been so big that it may be over a month long. Now, what this means is it's very difficult to predict what the yield is going to be on Ethereum. If you're currently a validator, your ETH is locked during the period from when you spin up a validator and enter that queue. You can't exit. There's no way to say, forget it, I'm tapping out. And so long-term, the goal of Ethereum is to create a base layer that's predictable, that everyone knows what the yield is going to be, and have a place where all the activity knows what the network security is going to look like. And so this new proposal is about smoothing that out. It's about building predictability into the network, where right now, with the amount of validators coming online, the amount of Ether being deployed into staking, there's this theoretical, the amount of circulating supply is going to cross well above 50% that gets locked into staking, and that makes gas fees difficult to predict.
We just have a stroke? What just happened? Did I just hear him say gas fees 3 times? Hold on. Sorry.
This new proposal is about smoothing that out. It's about building predictability into the network, where right now, with the amount of validators coming online, the amount of Ether being deployed into staking, there's this theoretical, the amount of circulating supply is going to cross well above 50% that gets locked into staking, and that makes gas fees difficult to predict. Because if there's less circulating supply, it's harder to know, well, how much you're going to have to pay for certain activity on the network, because you're going to have to.
That poor son of a bitch. He was hoping that CNBC was going to cut that out, and they totally just fucking dogged him. Like they just left it in there. Oh my God.
Buy up very scarce amount of ETH. And so what we're trying to do here is buy time and build in that predictability. And that's what this is all about.
So how would this work in practice? And is this the only way to sort of slow down the pace of staking and avoid some of those issues that come with too much ETH locked at one time?
I think that the amount of ETH getting deployed into staking is slowing down naturally. You've seen the yield come down. It was well above 5% when proof of stake went live and the merge first took place, which is all of that activity moving from the proof of work chain to the proof of stake network. And now what you're seeing is that activation queue, the timeline from when you deploy your staked ETH or your ETH into staking, that's gone from as high as 40 days down to just above 10. And so what that tells me is as that yield comes down, and it's currently just above 3.5% for the consensus layer, what that's telling me is that less people are finding staking attractive. So we're finding an equilibrium here. And the goal, though, is to make this even more predictable, to say who really wants to perform this activity, who wants to lock up their ETH and provide out this infrastructure to the network, to provide that network security, and what will that long-term yield be? So we already are seeing the amount of ETH deployed slow down, but it's still not predictable. There's still no ceiling on how much ETH can enter that queue every day. At any point in time, someone can click a button and deploy a large number of validators. I mean, they have to have the ETH to do it. But what this means is people are going to have to plan ahead. People who are staking providers are going to have more guarantees around what they can earn. And that's good.
I want to pivot to checking in on the ecosystem as a whole. I mean, you mentioned the merge earlier, and we just hit the 1-year anniversary of that upgrade on last Friday. And I just want to ask you about that upgrade over the past 12 months. It was largely dubbed a success from an environmental impact perspective, from an efficiency perspective. But are there any other big lessons or takeaways over the past 12 months since that transition to proof of stake?
I think everyone thinks that the merge was a success. Where the ecosystem has evolved since then is we're seeing a lot of activity move on to Ethereum layer 2s. You're seeing bridges between other layer 1 networks start to turn into rollups on Ethereum. And the world is kind of merging together where there are these narratives around a multi-chain universe versus ETH with these layer 2s. And it's all kind of coming into, you're going to be able to move your asset between any of these chains, whether it's Ethereum natively, with this kind of vertical stack up to a layer 2, or it's on a different network. It's really just going to be about where is the activity appropriately priced, what has the infrastructure for the specific type of transaction that you're trying to perform. And so the ecosystem's evolving. It's figuring out how do you build scalability in, and it's not just going to be up to Ethereum at the base layer. It's going to be whatever network or architecture makes the most sense. That's fantastic from an institutional standpoint. I imagine we're going to start to see private layer 2s begin to emerge. Again, companies like Visa who are looking around and saying ETH layer 2 or Solana may be appropriate, and they'll figure out how to settle up between the two different networks. And so the ecosystem's evolving. It's maturing, and long term, we just want to have more and more of these blockchains plugging in to being able to talk to one another. More activity moving on chain, more tokenization of real world assets moving into this ecosystem. It's time for the institutions who have been either on the sidelines or beginning to do very thoughtful research to start spinning up their own tech and saying, how are we going to tokenize activities that we have inside of our traditional financial infrastructure? How do we leverage this technology and these networks? And can we move some of that stuff on chain? And I think the answer is yes. And now it's really about just scalability, building out that infrastructure, and having clarity from a regulatory standpoint. And that includes staking clarity. A recent paper that was put out by IOSCO that talked about DeFi, that covered what the staking providers and their relationships might be to retail or the custodians, how MEV relayers, how the transaction fees are processed. There hasn't really been clarity around, are these registerable activities or not, and what the appropriate relationships should look like between all of these different entities. But we're getting there as we move in through the rest of 2023 and into 2024, and the US spot ETFs come to market. I think it's a really exciting time for the space.
I want to finish the conversation on Ether, specifically around price. I mean, we had this run up earlier this year. We sort of came off the FTX banking crisis lows. We've rebounded, but now we're stuck in this range right now. And on Crypto World, we've explored the catalysts that will sort of start the next Bitcoin bull run. But I want to ask you if there are any catalysts for Ether that can help drive that price any meaningfully higher for a long period of time versus these maybe short bursts that we've seen in recent weeks.
Well, there's certainly a lot of excitement right now around all of the US Bitcoin ETFs that are pending approval from the SEC. I think people expect that those will be greenlit somewhere within the next month to 6 months. Whether it takes longer than that, who knows? But I think it's time for these products to come to market. So we know why people are going to be excited around Bitcoin. ETH and the rest of the market is going to follow that move. Now, once there's a path to a spot ETF for Bitcoin, you would assume that a spot Ether ETF will also come to market. Now, whether you're able to stake inside that ETF or that takes more time, who knows? But that is certainly going to be a catalyst. The market has moved past the FTX era, and you're seeing the institutions that went pens down around the FTX and the Three Arrows Capital and the Voyager collapse. They're starting to come back to the space, and the primitives around why Bitcoin and why crypto and digital assets and settlement layers, that never changed. So despite the outside perception of the price being very volatile and a pretty hard 2022 in just the asset pricing, that's fine. People need to shift their attention to long-term, these networks are going to continue to exist. They're very important. Bitcoin specifically around being a check basically on just central banking policy, and Ethereum acting as this politically neutral settlement layer for all sorts of activity. So as attention turns back towards the space, I think both Bitcoin and ETH will catch a bid either later in this year or early next. But the inflection point, I really do think is going to be these spot ETFs followed by the Bitcoin halving next year and just more activity moving on chain.
Yeah, I honestly think he is 100% right. As soon as these ETFs come online for Bitcoin, I think Ethereum's shortly after. I mean, you can see that they've already, what was it, Grayscale, they just said, applied for Ethereum ETF or whatever. Let's see, where was it? It was, oh, it was back here somewhere. I don't know. It was somewhere. It was in, just rewind, because I don't feel like looking for it. Anyways, let's see. In the chat, I saw you guys talking about jingle mining and actually getting one of the units. Who was saying it? Let me see. Sustainable crypto. So yeah, unfortunately, right, when jingle mining or honestly any company that sells like ASICS, like even Gold Shell, for example, right? I bought mini doges one time. I got 3 one time, and then I got 3 again. Okay, so the first time I got 3, I purchased 2, and then I purchased 1. But I got them all like relatively within the same time frame, right? They shipped 2 and then the other one. Now, I didn't get any type of duties or whatever the hell they call that, the friggin' taxes that you get when import taxes, right? I didn't get any of that, right? And it was because the value of the units were under $600 or something together, because I only paid like, it was just around $600 for the 2 mini doges, but the value of them was less when they shipped them, right? That's what they claimed them anyways, because they didn't make as much, or they didn't cost as much for them to make. When you get bigger machines, they will charge you anything over $600. It's like X amount of percentage per whatever the unit is. So it's different for everything, but yeah, it's not really, it's unfortunate, but that's how import taxes work. It sucks. You do get shafted, and I understand why you're upset about it. I totally get it, but it's not jingle mining per se. It's literally every one of those companies. All right, anyways, let's get into this. So expect a bad 2024 recession. This video was actually extremely well done from Altcoin Daily. So let's dive into this. You guys have any questions? This is about the Fed meeting yesterday. They did not raise hikes, but it's probably going to get pretty shitty in 2024. Let's do it.
Federal Reserve Chair Jerome Powell has just dropped a bombshell on the Western world with his latest statements regarding Federal Reserve interest rates, inflation, and recession.
I've always thought that the soft landing was a plausible outcome, that there was a path, really, to a soft landing. I've thought that, and I've said that since we lifted off. It's also possible that the path has narrowed and it's widened, apparently. Ultimately, this may be decided by factors that are outside our control.
Federal Reserve,
AKA, we're fucked. That's what he wanted to say, but he can't.
Policy will remain unchanged between 5.25% and 5.5%, with at least one more rate hike expected this year, possibly no rate hikes, and next year expectations are rates decrease. What's concerning, however, is Jerome Powell's statements on a looming recession and a soft landing. It has been the Fed's goal to raise rates, curb inflation, and achieve what's known as a soft landing. What is a Fed soft landing, you ask? If the Fed raises interest rates a lot, it may cause a recession, known as a hard landing. However, if the Fed can raise interest rates just enough to slow the economy and reduce inflation without causing a recession, it has achieved what's known as a soft landing.
Did anybody actually think that we were going to acquire a soft landing or achieve a soft landing here and not go into a recession? We all expected to be in a recession already. I mean, they're saying it's not, but pretty clear that we're there.
Federal Reserve Chair Jerome Powell now says a soft landing may not be a plausible outcome and may be outside their control.
I've always thought that the soft landing was a plausible outcome, that there was a path, really, to a soft landing. I've thought that, and I've said that since we lifted off. It's also possible that the path has narrowed and it's widened, apparently. Ultimately, this may be decided by factors that are outside our control. We will restore price stability. We know that we have to do that, and we know the public depends on us doing that, and we know that we have to do it so that we can achieve the kind of labor market that we all want to achieve, which is an extended period, sustained period of strong labor market conditions that benefit all. We know that. The fact that we've come this far lets us really proceed carefully, as I keep saying. So I think that's the end we're trying to achieve. I wouldn't want to handicap the likelihood of it, though. It's not up to me.
Par for the course with these guys. Say one thing, do another, and they just assume U.S. citizens will forget. Because
Facts.
I remember when Jerome Powell and actually other high-up government officials, they allowed the mass money printing, the stimulus of 2020 and 2021, they deceived us and made us believe that inflation would only be transitory. Inflation has been out of control for the past several years. You know this. I do think deceive is a good word to describe what I'm about to remind you of here. Do you remember when they repeated this to you?
I really doubt that we're going to see an inflationary cycle.
Most economic analysts believe that it will have a temporary or transitory impact.
The faster than expected increase in some of those prices is actually a good sign.
The overwhelming consensus is going to pop up a little bit and then go back down. No one's talking about this great,
This is something that will settle down.
Transitory.
Transitory.
And the data shows that most of the price increases we've seen were expected and are expected to be temporary. There's nobody suggesting there's unchecked inflation on the way. It's highly unlikely that's going to be long-term inflation that's going to get out of hand. I don't know anybody who's worried about inflation.
Over the last couple of months, we actually saw it trended downward.
President Biden's chief of staff, Ron Klain, enthusiastically retweeted an economist who had said in part most of the economic problems we're facing, inflation, supply chains, et cetera, are high-class problems.
What is the Granholm plan to increase oil production in America?
Oh my God, that is hilarious. Well, the number one thing that the president can do is help get COVID under control. That we know is the root cause of inflation.
President Biden this afternoon saying he thinks we're at the peak of the crisis right now and that lower prices are on the way.
The inflation has everything to do with the supply chain. Make no mistake, inflation is largely the fault of Putin. I'm going to do everything I can to minimize Putin's price hike here at home.
If you want to get rid of inflation, the only way to do it is to undo a lot of the Trump tax cuts.
I think ever since you've come into office, things are really looking up. You know, gas is up, rent is up, food is up, everything.
Hey, join us at Bitcoin
Of course, got a shill right in between. I'm going to be honest, though. That was a really amazing entire little clip that he put together there. So shout out to Altcoin Daily for doing that. Let me skip forward here.
They said inflation would be transitory. It wasn't. They then said it would be a soft landing. At this point, it doesn't seem likely that's going to happen. What's next? Guys, subscribe to Altcoin Daily. We show you what's really going on. We keep you informed on the cryptocurrency market like no other channel does. Make sure you subscribe. Make sure you join our team. So it looks like a soft landing is less likely. So, is a recession in our future? JP Morgan analyst explains.
The U.S., however, we think is probably likely headed to a recession towards the end of this year, start of 2024. We think the primary driving force of that is going to be tightening credit conditions, as bank balance sheets, particularly among U.S. regionals, remain somewhat flawed and still have to be repaired in order to get bank lending going again. So we think that the drying up of credit conditions will be what will bring the U.S. to a recession at the end of this year, start of next year.
When exactly will this recession hit? I like what Santander chief U.S. economist analyst said about this. Listen.
Inflation is probably going to stay pretty high, and so we've gotten good news, but it's not clear whether it's going to persist.
So in this environment, how long would you have to see a trend of less hot inflation, if not deflation, to sort of feel like, okay, we're on more solid footing here?
Yeah, so we have 2 months of good CPI numbers. I think if you get, 3 or 4, then you're starting to get to a point where you can say, okay, at a minimum, we can be very patient. Maybe we don't have to go, or we can just pause for a while and see what happens. But there's always the risk. Inflation may come down for a while and then reaccelerate, right? So you're always kind of hostage to the data.
How do you handicap recession risk, if at all?
I don't think we're going to see a recession in the near term, but I think 2024, there's a little bit more of a risk. I think we'll probably muddle through, but if we're going to get a recession, it's probably going to be next year.
That will be interesting in a political year, very much so, because it's very hard for an incumbent to run against a slowing economy.
Sure.
Right? Yeah.
Yeah, I mean, we're not thinking too much about that just yet, but that's going to be a big deal in 6 or 9 months.
And that's really the key. Next year is an election year. Personally, I'm voting for the pro-crypto, pro-working class, pro-American candidate. And guess what? When the economy turns around, that's going to be very good for crypto. Make sure you're subscribed.
Of course it is. Shout out to Altcoin Daily. That was a fantastic video overall, for the most part, except for the shill in the middle. But it's guys, I don't know. I'm shocked. I thought we were already in a recession. Didn't you? Am I the only one here that thought this? I mean, I know they're saying that we're not, but it's pretty freaking clear, man. It's pretty clear, at least in my opinion. All right, this is the last video we're gonna watch today, and then we can just talk about it or whatever. If you guys have questions, feel free to ask in the chat. Bitcoin's next bull run, 3 big trends to watch. This was a very good video that I got to watch like half of from CNBC. They kind of put together everything in like a nutshell from the last like year, more or less, as far as I've seen anyways. Just like a few clips that I've seen. It was a little ways back. So anyways, let's get into this. If you guys have any questions, feel free to ask in the chat and we'll go from there. Let's do it.
Bitcoin investors probably want to forget the past 12 months. On the heels of the collapse of FTX, the world's biggest digital currency started this year at around $16,500. Since then, Bitcoin bounced back around 60%, but in recent months has been stuck in a tight range between roughly $25,000 and $30,000. In 2023, investors have weathered a slew of industry bankruptcies, low trading volume, and a regulatory crackdown in the U.S., which have kept the cryptocurrency below $32,000. Not to mention the closure of crypto-friendly banks Silvergate and Signature back in March.
People were scared about, am I going to be able to make payroll if I'm a small business owner? Am I going to be able to access my funds? What does this mean in terms of, I thought my assets were safe. Now it feels like it's more someone else's liability and whether or not they can pay it back to me. That kind of a change in sentiment has a real effect on Bitcoin. I mean,
there's tremendous headwinds for not just the crypto market, but for...
Shout out Roadputs.
Eagle,
thank you so much.
Smeagol, they're lying, don't trust them.
Appreciate the €249, buddy. You're awesome. And Miss Pocket Change, thank you.
Markets in general in the world, everything from macroeconomic stuff and inflation to socioeconomic stuff and political unrest and all of this. 2023 has been an interesting year. And then on the crypto marketplace, there's additional headwinds in the form of the banking challenges from earlier in this year coming out, the FTX situation, and then the regulatory uncertainty. All of these things are a bit of a drag on the marketplace.
Now, investors have been searching for a catalyst that could spark Bitcoin's next prolonged rally. And that good news doesn't seem too far away, with ETFs, regulatory clarity, and something called the halving on the horizon.
Oh, we're going to have regulatory clarity? I'm super excited about that. I didn't even think that was possible. I thought that was just,
Back in June, a whole host of asset managers, spearheaded by the world's largest, BlackRock, filed to launch spot Bitcoin ETFs. Those are funds that track the price of the crypto asset. The moves immediately spurred a wave of buying as investors hoped Wall Street was poised to go big on Bitcoin.
BlackRock is just so much bigger and so much more important than these other companies that have filed, that if BlackRock does have an ETF, you just know they're going to win. They have the resources, they have the marketing, the distribution to put new people into Bitcoin.
Then another boost for crypto when Ripple got a partial win over the SEC. A judge ruled in July that the crypto firm's native XRP token is not a security in some cases. And in August, a federal court sided with digital asset manager Grayscale over the SEC in its attempt to convert its Bitcoin trust into an ETF.
We look at the price of Bitcoin following the Grayscale ruling. It immediately popped up 6% right after the ruling was announced. And this is a logical reaction to the news, but it was driven primarily by that fear of missing out. It was driven by retail consumers saying, hey, this is good news, I'm going to react to this good news. However, it then retraced and is now trading more in the zone where we would expect it to be based on historical trends and based on where we are in the current market cycle.
Now the question is, if those ETFs get approved, will it spark significant long-term gains for the cryptocurrency?
It almost certainly will. If you look at Wall Street backing right now, every single major firm is trying to do something in the Bitcoin space. And that wasn't true even a few years ago. The narrative has completely changed. And when those spot ETFs are approved, not only will that be massively significant from a narrative perspective, but also Bitcoin is inherently limited in its supply. And so when there's additional demand, and possibly massively in additional demand, and the same supply, it's only natural that the price would spike. So we are expecting this to be a major catalyst for price action in 2024.
So with all
now, real quick, Bitcoin, right? Overall, I want to say don't be fooled, because I honestly do think that the big guys in this situation right now are keeping the price down to accumulate as much as they can. They're just going to dump it all and then buy it right back up as soon as it goes down. That's what happens. I mean, there's no way that's not what's happening right now.
The optimism building as we head into next year, are we about to see Bitcoin's price explode? Right now, it's still hard for people to move into Bitcoin. The cryptocurrency's recent prices are more than half of its all-time high of nearly $69,000 reached in November 2021, something IDX Digital Assets CIO Ben McMillan attributes in large part to the fastest rate increase in the history of the Fed.
Rising rates start to reprice risk assets, and all of a sudden, we're talking to a lot of institutional investors who are saying, listen, if I can get 4, 5, 6% in treasury bills, why would I take any risk elsewhere? And so that's kind of the big story across macro assets. Now layer on top of that, crypto had its own crypto winter in the form of regulatory crackdowns. And we had a lot of bad actors flushed out, which ultimately is a good thing. The FTX scandal, of course, was a huge scandal unto itself. And so as investors work through that, you couple that with the regulatory overhang, and there was a lot of uncertainty kind of coming into 2023. I think the good news is that we're starting to get through some of that regulatory uncertainty. We're seeing things like spot filings from BlackRock, which are very encouraging for investors longer term. And so there's starting to be a light at the end of the tunnel.
That could spur investors, especially institutional investors, to buy back into Bitcoin. And Gavin Michael, the CEO of the publicly traded crypto platform Bakkt, says that could be one of the drivers of Bitcoin's next bull run.
Approval of the ETFs is about increasing participation. It's about more people having exposure to the Bitcoin asset in their portfolios through the ETF product. I think we've got the fourth Bitcoin halving coming up in the first half of next year. Traditionally, that's signaled a strong and positive run in the price.
In fact, the first ever halving in November 2012 saw the price of Bitcoin balloon by 384%, according to CC data. The market-moving event typically happens every 4 years, and it's when the reward paid out for mining Bitcoin is cut in half.
The one nice thing about Bitcoin is that the supply is 100% transparent. That can be modeled out for decades because we know exactly what it is. It's immutable code. And so that's why there's such this interest around halving. And we've seen that rallies coming into the halving, and we're coming up on, the next halving year, not that far off. And so we would expect that absolutely to, contribute to price in a positive fashion.
One other catalyst, regulatory advancements for crypto around the world.
Hong Kong has comprehensive legislation in place. So does the EU through MICA. We have good comment papers in the UK. We're seeing that the regulators really start to work hard to bring market structure to the digital asset space. And I think Bitcoin will benefit from that as well.
So with all that positive momentum, is a Bitcoin bull run imminent?
I think a bull run is certainly in the cards. The question, of course, is when. Longer term, when you look out 3, 5, 10 years, the bull case for Bitcoin is frankly as strong as it's ever been. But that doesn't mean that it exists in isolation. The macro economy, investors have to choose how to allocate their risks. And so Bitcoin is and always likely will be a very risky asset. And so when you have things like interest rates rising as quickly as they did or staying longer for higher, that's absolutely going to impact risk assets, of which Bitcoin sits at the top. And so I do think in the near term, we urge caution, which, we always do when it comes to Bitcoin. But in particular, I think there could be some weakness, absolutely, in kind of, the back half of this year, potentially even Q1 of next year. But after that, things start to look, really encouraging for Bitcoin longer term.
Noel Atchison, author of the Crypto is Macro Now newsletter, says the return of volumes, liquidity, and volatility is key to kickstart Bitcoin's next bull run. But that's not all.
Any announcement of a large investor stepping in, any announcement of a foreign central bank perhaps deciding to accumulate Bitcoin as reserves, which I fully expect to happen fairly soon. And on the macro front, any signs of monetary liquidity coming back into the market, which, let's face it, would probably be for not very good reasons. In other words, a meltdown and signs of recession, but that would also be enough to get investors back into risk assets, and Bitcoin is arguably one of the most liquidity sensitive risk assets out there. So any of those factors, in my opinion, would be enough to trigger the next catalyst, the next bull run upwards, but the market just doesn't feel ready for that yet.
But some think a Bitcoin bull run is already underway.
I think we're in the early stages of that bull cycle now. If you look at Bitcoin's price recovery, even just this year, it's significant. And last year was all doom and gloom. This year, we're seeing the slow momentum up, and now we're seeing that sideways movement. And that sideways movement is like a springboard. The longer it moves sideways, the tighter and tighter that coil gets. And that means that when it's time to explode, it'll explode even harder than it would if that action were just consistently moving up.
Very, very good video from CNBC and Mr. Hawk Crypto Mining. I wanted to show you this. I figured you get a kick out of it. Altcoin Daily posted this on his channel, and it's a riot, so we must watch it right now.
You're still wearing your engagement ring, huh?
Yeah.
Yeah?
I'm gonna give it back to him. Do you want it now?
Sure. I mean,
Don't give it back. Well, no, I'm not gonna keep it.
Right?
Here.
Thank you. That's a Bitcoin.
Boom. He's like, thank you. That's a Bitcoin. See ya. Great. That was great. It made me laugh this morning at like 7 a.m. I'm like, that is the perfect thing that I could ever retweet on Twitter. Tell me that wasn't fantastic. All right. Let me see what you guys have in the chat. Let me see. Yes, that was great, wasn't it? Wasn't it? Told you it was. Told you it was going to be excellent. All right, you can leave now. If you'd like to leave, you can leave now. But we do have to get out of here anyways. I got to get back to daddy duty. And by the way, if you guys have ever had one of these things, this is like crack in a can. You guys ever had this? It's like a pre-workout drink, but Jesus, this thing's insane. Get me all hopped up on not sugar because there's no sugar in it apparently, but I don't know what it is. Anyways, guys, have a good day. Hopefully you enjoy your Thursday. One more day till payday. So hopefully you guys enjoy it. I'll catch you guys soon. Have a good one. Peace out.
still wearing your engagement ring, huh?
Yeah.
Yeah?
I'm gonna give it back to him. Do you want it now?
Sure. I mean,
He meant to say, fuck yes, I want it back now.
Well, no, I'm not gonna keep it.
Right?
Here.
Thank you. That's a Bitcoin.